we can call this a slight miss, but if you look at the numbers, really, they beat on the bottom line, 110 versus 109 that was expected. The revenue miss was $32.47 billion versus $32.51. So you were talking about ever so slight of a miss. What really happened?
I don't think it was a miss at all. It beat our number in both respects, revenues and earnings. If you want to isolate the miss part, it was the Windows OEM business, the sales into the PC manufacturers. That right there was a not quite $200 million negative delta. But in other respects, they beat. Cloud revenues in line or better, including the traditional on-premise business, services business better, the office business better. So in multiple respects, they were better than we thought. LinkedIn had another outstanding quarter.
Okay, so why is the takeaway? Well, first of all, why is the stock down? And why is the takeaway that there are concerns about the cloud business, even though it was still 74% growth in Azure? I mean, is the street missing something here?
Yes, and that's the opportunity. We think there's still very strong performance as a critical metric in cash flow. They did over $30 billion of free cash flow for calendar 2018. We expect that within the next 2 years or so to grow to over $50 billion of free cash flow, driven by the growth of the cloud business. And by the way, they had hundreds of basis points margin improvement in the cloud business year over year. So the street is absolutely missing something here. And in any case, as far as Windows business is concerned, they're expecting an improvement over the next 1 to 2 quarters, consistent with what Intel said regarding better chip availability.
So is there anything to read into the cloud business that informs this debate as to whether there's a lull in cloud investment industry-wide, either market share dynamics or just, demand in parts of the world hasn't been as strong?
If the premise of your question is that it's based on what Intel and others were saying regarding chip sales into the data center capacity, I would say no. The reason being that, again, you look at Azure up 76%, very strong growth consistent with the preceding quarter. Microsoft's going to continue to build out the data centers. So for me, as a software analyst, my concern is consumption of the capacity in the data centers, and it's clearly growing. The profitability is improving because they're scaling on the capacity, and Microsoft is clearly continuing to invest in its own chip technology, by the way. We've talked about that. And so, no, I would regard this as not a pause, inferring from what the chip guys are saying, but instead look at what Microsoft is actually doing in terms of its customers' consumption.